All right, guys, so first of all, we're going to start with weekly market recap. And as I had told you exactly last week, market broke above all-time highs, making another all-time highs. And I did highlight also that we have a very strong bullish momentum on gold that may cause no retracements at all. I did highlight, and this is exactly why you guys should watch the videos because of my commentary, rather than just see the charts on TradingView. So if you're not subscribed, yeah, now is the time. So that's about gold. Looking into Euro USD, we can also see that market did exactly what we had anticipated. It retraced to resistance and then reached to support again. And because of the strength of the USD, all these economic reports came last week, we saw the break below the support. Going to Nasdaq, we can also see, as we had anticipated, a consolidation. And even though it shows in red, but still it's the same concept, a consolidation within the range. Market did take liquidity from below the support as an extra, which showed a little bit of bullish momentum on it, but also we had a strong bearish sell at the end of the week. As I mentioned in the beginning of the video, we had mixed opinions upon AI stocks in the United States. So, going to Nifty 50, we can see that Nifty 50 also broke below the support and moved again to the resistance, which is somewhat as we had highlighted.
Financial markets are in shambles, aren't they? We got a lot of things happen in the past week. First of all, Donald Trump has raised the defense budget of the United States from $1 trillion to 1.5, preparing to what might be the World War III. However, the same guy pulls an attack off Iran last seconds before it goes live. And for some reason, they're claiming they want Greenland, and they're threatening any country that stands or opposes that positioning of the United States, claiming Greenland to implement tariffs upon that country. Going to the Asian stock markets, we find AI stock-related, let's not say collapsing, but having negative results. The AI sections United States, actually, it's mixed between optimism and pessimism. All right, Morgan Stanley, as one of the biggest and largest banks on the planet, has made some pretty good results on the fourth quarter of 2025, making its shares rise by 4.8%, which is incredible if you ask me. That is what is happening in one section of the world. And going to the other side of the world, the BRICS group are more entitled now and more serious about making and finalizing that coin that will be backed with gold to ease and secure international transaction, not relying on the dollar, even though the dollar has been in its most, let's say, strongest position in the past 6 weeks. In fact, a lot of reports economically came on the dollar bullish because the Americans want the dollar to stay strong in case of any geopolitical international geopolitical situation happens. The dollar is still strong to purchase and sell items. However, that was exactly the reason why most analysts are anticipating a less possibility for an interest rate cut to come, and that sees the momentum on gold to skyrocket, even though there is this global situation. And also top-tier analysts are expecting that all of what is happening right now is just politics and show of strength, not really any military add-ons are to come into the picture. That's actually what's happening, and let's see how that is working on charts.
All right, looking at gold, it's actually in a very critical situation at the moment because we have so many mixed fundamental reasons to push it to either sides. And when fundamentals are mixed, you most of the time find volatility. Gold shouldn't really fall. And we can see after a very solid retracement, we had an expanding wedge pattern, somewhat somehow. And from there, we should expect a technical retracement, and market actually fell exactly to the support and found some demand from it. So from here, we can anticipate a little bit of an up movement. It's going to be actually a little bit tricky to follow gold very precisely for the upcoming week because of all the things happening here and there. We basically have multiple patterns that can be formed. First one is this trend. We can see that gold is in an uptrend, and from here, as in technically, it should go down, but fundamentally we don't have these reasons. But also there is another pattern, which is we can consider it as a falling wedge pattern. I should be drawing things for you guys, but these charts are already made up as a team decision. That's why I'm making these weird lines, but just for your guys' understanding, we do have a wedge pattern. So both technical patterns are giving us an idea that gold is more likely to make a correction, and that correction should be either as a first target this we have this support and the trend line as a second. However, fundamentally it is more bullish, especially because a lot of investors are going to gold and bonds, not only gold as itself, for a safe haven. So if you really want to trade gold, I would recommend you to stay away from it for the upcoming week, because it's more of a mixed opinions upon it. That'll be it about gold. Let's go into Euro USD. All right, looking at Euro USD, we can see after breaking that very beautiful trend, we can see that Euro USD is also forming for us another trend. This time it's on the downside. Market right now is at support in the middle of the channel, so most likely we'll see a retracement to the upper bracket and this resistance before a possible continuation to the downside, and most likely it will continue in a bearish movement, because I believe the Americans need that strength upon the dollar. And if you guys follow financial markets for quite a while, there's actually a sequence happening. Every other time there's a lot of geopolitical tension happening and gold just skyrockets. Well, in this time didn't skyrocket, but did make a new all-time highest. In that case, after this geopolitical tension, you find a lot of economic reports to come positive on the dollar during these times, which actually supports somewhat some understanding that these reports are calculated. I'll say that word rather than other word. You guys can understand what I would use according to my personal opinion, but that's the word I'm going to be using, more calculated. And if those reports are more calculated, then we can actually also anticipate that these situations that are happening around the world fundamentally also are calculated. Anyways, that's about Euro USD. Let's go into another asset. Looking at Nifty 50, we can see that Nifty 50 is forming for us some sort of symmetrical triangle after an impulsive move to the downside, and that's basically called a bearish pennant. Now, if you notice, we have the solid support on Nifty 50 here, and market didn't really reach out to it before it found strong bullish sentiment upon Nifty 50, which pushed the price up. Now, this bullish sentiment here does not necessarily mean that Nifty 50 is not going to fall. I would rather consider this as a correction rather than demand because of a rapid fall. Okay, so from here, we could actually see Nifty 50 retesting this resistance again before an actual reach to this support zone. Right, this would be an optimal movement to Nifty 50 before we see a possible movement to the upside. And if it happens like this, we might see some pattern forming on Nifty 50. And this is actually how analysis goes, guys. You anticipate what happens and what might happen. Based on what happened, we might see some sort of fall in wedge. It wouldn't really necessarily be a channel, maybe a wedge, an expanding wedge. Yeah, if this retraces up. All right, that's about Nifty 50. Let's go into another asset. In this case, we're going to Bitcoin. All right, guys, looking at Bitcoin, there's a lot of things happening on Bitcoin. Hear me out. So I've been telling you there's slight of bullish sentiment on Bitcoin. That's exactly what happened. We had a break above this resistance and a retracement to it, market forming a bull flag in the process. Okay, so this is actually very, very good technically. So from here, we can expect a continuation to the upside where Bitcoin actually traces to this, this resistance. All right, and if that happens, we can see Bitcoin actually forming such uptrend. So there could be a possible retracement to this support actually here on the trend line before we see it continuing to the upside. But either ways, fundamentally, we have Donald Trump might sign soon enough a massive project to control the dynamic structure of cryptocurrencies and their flaws. And not flaws, flows, okay? Accent stuff. Anyways, So if that happens, this will open doors for trillions of dollars, let's say billions of dollars, to be pumped into cryptocurrency and Bitcoin especially. And with all these geopolitical tensions happening and BRICS wanting to back their currencies, Europe has digitalized their currency, and all of this worldwide, let's say, AI situation. So we have Bitcoin having huge potential as an investment for the upcoming years. Whatever you do, make sure you stick to risk management. That is the situation. Keep an eye on Bitcoin. And now we're going into NASDAQ. So we can see NASDAQ is consolidating within this ascending triangle pattern. However, market did go below the trend line to grab liquidity, even though we had this strong bearish movement to the downside, which was for liquidation. We still saw NASDAQ going back up and down, and now it's resting on the trend line right above the support. So I've highlighted this in previous videos where even though we have sharp, big bearish movements on NASDAQ, that does not really reflect the necessity that NASDAQ is bearish, as we can see in multiple areas. So we still have this, let's say, biased opinion on both ends, which means people are optimistic and pessimistic about AI. It could be a bubble, but still a lot of big, let's say, institutions are investing in AI overall. And some of the biggest investors around the world are actually seeing it as a bubble. Similarly to the bubble of early 2000s, the internet bubble, they call it, when a lot of companies started having .com and telling people we're going to have like a very optimistic future. And a lot of investors started buying stocks of companies that failed to deliver what was expected from their end, which caused a crash in financial markets. This might be the case with NASDAQ, but that doesn't necessarily mean that the collapse is to happen soon, right? If it is to happen at all. We are in different times. People are more aware of finance. A lot of things can happen. I would recommend you to stay away from NASDAQ until we have a clear indication whether it breaks above this resistance and continues up, possibly breaking above its all-time highest, which is probably not going to be likely in a short period of time, or it breaks below the support. But for the time being, we can anticipate a retracement to this resistance. Further than that, technically, for a long period, I could actually give you some insights, but for a week span, that'll be it as an anticipation. Be cautious trading. That's from my side. I'm going to move the microphone to Mr. Emilian from London to give you a look on the fundamental side. So that will be it. Glad to see you on the screen, Mr. Emilian.
Thank you, Samir, for sharing your insightful analysis on the technical side. Here is Amir Hamidian, Master of Finance student in the UK, also fundamental analyst at Xylostar. All eyes are on Iran as Middle East tensions are accelerated. And from the other side, we got different economic indicators such as US CPI, PPI, and retail sales number. Let's have a look. Welcome back to another Market Weekly update. As we are getting closer to the mid of January, corporate earnings in the United States are popping up, and at the same time, last week was absolutely chaos as tensions in the Middle East escalated. Let's go about it. For this market update, I'm going to talk about geopolitical updates from the last week as it was at the center of market participants' attention. It's been around 8 days. Iran faced electricity and internet cut by its regime due to high level of protest. Donald Trump warned Iran regime so many times that if they don't stop executing people and killing protesters, he will target some vital bases of IRGS in Iran. All US military bases in the Middle East have been put on the high alert, and US Navy supercarrier USS Abraham Lincoln is heading to the Middle East. Gold and silver as a safe haven for investors reached to higher levels due to these tensions. Last week, from the economic side, was important as well. US Consumer Price Index released same as estimates. The Consumer Price Index for all urban consumers, or but say CPI-U, increased by 0.3% in December 2025, and over the last 12 months, the all item index increased by 2.7% annually. The index for all items less food and energy increased by 0.2% in December, and the shelter index increased by 0.4% over the month, and it was the largest factor in the all items monthly increase. From the other side, which means the producer price index, one of the most critical inflation gauges, which is under the track of the Federal Reserve. Also, we saw an increase by 0.2% on monthly basis for November. The November increase in price for final demand can be traced to a 0.9% advance in the index for final demand goods. Price for final demand services were unchanged. Initial jobless claims fell to 198,000 in the week ending to 16th of January, dropping back to below the critical level of 200,000, which is often seen as a leading indicator of a strong labor market. This reinforces the view of the Fed that employment conditions remain resilient despite broader economic uncertainties. In the United Kingdom, real GDP grew by 0.1% in 3 months to November 2025, following flat growth in the prior period, indicating weak but positive economic momentum. Growth was driven by the services sector, while production and construction continued to contract, reflecting sectoral divergence. On a monthly basis, GDP rose by 0.3% in November, supported by gains in services and production, partially offset by a sharp fall in construction. From the corporate earnings, last week, big banks and firms released their earning reports for the fourth quarter of 2025, such as JP Morgan, BlackRock, TSMC, and Wells Fargo as well. JP Morgan and Wells Fargo reported solid profits supported by resilient consumer activity and trading revenues. From the other side, BlackRock posted robust results driven by strong asset inflows and higher assets under the management. Eventually, TSMC exceeded expectations as demand for advanced chips remained strong, reinforcing optimism around the AI cycles. Let's have a look for the upcoming week. Next week is going to be packed by different economic indicators and corporate earnings as well, such as CPI for the Canadian dollar initially at the beginning of the week. Later, we are going to get the CPI numbers for Great Britain as well. And worth to be mentioned, Bank of Japan policy rate and monetary policy statement will be released on 23rd of January, which means end of the week. We are going to get different indicators such as retail sales number for the Great British Pound and also PMI for the different regions such as European Union, again UK, and also US as well. From the corporate earnings, next week is going to be super crucial as we are going to receive the latest updates regarding the operations of some big firms in the United States, such as Triple M, Netflix, Johnson & Johnson, P&G, Intel, Interactive Brokers, and other firms such as Bank of California. Stay tuned with Xylostar. See you next week.